What's up, everybody? Hope you guys will be doing good. So today I took two trades on the silver bullet strategy. One I took on euro and the other one on SPX. I shared these trades on my Twitter too, as you can see in these screenshots. I will share the link to these tweets in my description so you can see it by yourself, and these two reach the target also. Okay, so in this lecture, with the help of this replay, I will explain how I took these trades. These two are totally different from one another. As you already know, I have explained the silver bullet strategy in detail already. So this is a continuation of that lecture. Okay, I will backtest, or I will show you the replay of these two trades, so it will help you understand how I take these trades. Okay, if you haven't watched the previous lecture on the silver bullet, I will share the link in the description, so you can watch that first and then you can come back to this lecture. Okay, so first I will explain how I took this trade on euro, and then I will go to SPX. So as you know, in silver bullet there are two windows, 3 to 4 am and 10 to 11 am. Like in silver bullet we trade between these two windows. So this was the 10 to 11 am window. I was going to trade in between this window. The price was here, but as you already know, in my previous lecture I have already explained that I use SMT divergences to take the silver bullet trades. Okay, and the SMT pair of euro is GBP. So I look at these two and I look for divergences. When I see any divergence, then I enter into my silver bullet trade. Okay, so I will forward it a bit and I will show you what kind of divergences I look for. Okay, so you can see the price was going down. Okay, still there was no divergence. The price entered into this silver bullet window. Now you can see that this was the last low before the price entered here. Okay, and you can see that euro took these lows. Okay, and if you look at the GBP didn't. So there was a clear SMT divergence. See, it swept this low and the GBP didn't. So there was a clear SMT divergence. So this is our first step. We look at these divergences. So when divergence is clear like this, I usually trade the silver bullet on 1 minute or 3 minute. If I get any fair value gap on 5 minute, it's good, but if I don't get it on the 5 minute, I shift to 1 minute. Okay, like there is a divergence, so I will shift to the 1 minute chart. Okay, and let's see, this is the bearish, the bullish divergence. So let's see if we get any fair value gap to the upside. So I will again forward it a bit. So still we have got no fair value gap. Now you can see there is a fair value gap. Okay, so my orders will be around here. Okay, just below this. Okay, this is the fair value gap, so my orders will be here. Let's see if the orders gets filled. So let me forward it a bit. So you can see the orders got filled in this fair value gap. As we look for these fair value gaps in the silver bullet strategy, this was the fair value gap on 1 minute and my stop loss was around here. Okay, now you guys know that we target 15 pips, so my target was 15 pips from around this area. You can see it went up. Okay, there you go. So we got our target of 15 pips for around here, and then I closed it. So this is how I took this trade on the euro. Okay, first we got this SMT divergence, and then we got this fair value gap on 1 minute. Okay, when there is a clear divergence, you can shift to 1 minute, or else you will go for the 5 minute fair value gap. But there was a clear divergence, so I went for this fair value gap on 1 minute. Now I will show you the example of SPX 500, how I took the trade on SPX 500. Okay, so this was the chart of the SPX 500. You can see this is the 9:50 a.m. This is the 5-minute chart. So the correlated pair or SMT pair of S&P is NAS 100. Okay, so I draw this vertical line at 10 a.m. Okay, now we look for any kind of divergences. Here you can see that this one was about to take these lows, okay, SPX, and you can see that this low was far away. Okay, so let's forward it a bit. What happens? These lows are important, so let's see. And see the price was going down. Then what happened? SPX took these lows and NAS 100 didn't. Okay, so still there was no fair value gap to the upside, but it was bullish. Then I was waiting for this fair value gap to the upside. Let's see if we get any fair value gap. So still the price is going down, and this was our 11 m. Okay, still here you can see that we already had one bullish divergence, but again this candle went below this previous candle. Okay, and here you can see that this candle didn't go below the previous one, so again there was an SMT. This is not a divergence, but this sweep is kind of bullish. Okay, this SMT sweep, one pair sweep this previous candle and the other didn't, and we all already had a bullish divergence. So now it's more bullish for me, and if I get any fair value gap I will enter into longs. Okay, still no fair value gap. Now you can see that there was a fair value gap, the price came down. Okay, so this should be your entry, and your stop loss will be below it. Usually my stop loss is 1 pip or 1 handle below this. So we entered around this area because of these two divergences, bullish divergences, and in indices our target is usually 10 handles. So you can see that the 10 handles are somewhere around here. Okay, around 58. So let's see if we get the 10 handles target. You can see we got this 10 handles. Okay, so this is how I took these two trades. Okay, in the forex you usually go for 15 pips, and in indices your target is usually 10 handles. Okay, so this is how I took it. There were bullish divergences both in euro and in SPX. In SPX the divergence was far away, that's why I waited for something bullish around this area. Okay, and then we got this sweep on SPX and there was no sweep on Nasdaq, so I entered into my longs at this fair value gap and we got our target of 10 handles. So I will backtest this strategy again in my next lecture. I will backtest the month of July, and then you will know what's the win rate of this strategy. So stay tuned for that lecture. Thank you guys. If you have any questions, you can ask me.